The analysis that the exodus of private landlords, specifically landlords selling up, is the single greatest driver of statutory homelessness. That's not merely anecdotal, it is a critical economic vector confirming the rental safety net failure. So the private rental sector, the PRS, is the largest source of flexible housing in the UK, but fiscal burdens and legislative burdens have driven capital away from this asset class, creating a profound supply shock. The legislative context is crucial. The recent introduction of the Renters' Rights Act, notably ending those Section 21s, as I say, badged as necessary reform, but there's an undeniable increase in risk, effort and administrative friction for landlords involved. This shift, combined with unsupportive fiscal conditions, so for example, new taxes, extra taxes on rental income, in the recent budget for example, that is incentivising exit over and above retaining the assets. If landlords sell rather than re-let, the housing stock is sometimes out of the rental market altogether, shrinking the available supply for the most vulnerable. The systemic collapse of housing stability, where the PRS, that primary source of accommodation, can't absorb household shocks anymore, pushing all displacement directly onto the statutory safety net, aka the local authority. We see this manifested in that chilling statistic I already mentioned, a family being made homeless or threatened with homelessness every 5 minutes. Constant severe rate of crisis entry, a direct consequence of the loss of private rental stock. And this directly explains that record figure of 132,410 households now reliant on emergency accommodation or similar. This will probably be 200,000 by the end of the decade, most of the analysis believes, and certainly I believe that. Not a coincidence, it's a mathematically verifiable result of supply-side economics. Shrinking supply in the PRS forces households into a already deficient statutory system, results in the skyrocketing costs of temporary accommodation, where taxpayers effectively pay the price of failure. Until the underlying economic incentives are adjusted to stabilise and grow the affordable PRS, or until the 39 billion investment in social and affordable housing to build 1.5 million homes, materialises, then the rental safety net will continue to fall, and that 132,410 households in temporary accommodation will just remain as a tragic demonstration of failed housing policy.